It's not been the most exciting of years for the price of gold. We saw all-time highs last year, around about $2,075 an ounce in August. And since then, you can see we've just been drifting lower, bursts of volatility along the way. So I thought, let's take a look at what the next few months might hold for the price of gold. The gold price is down about 6% for the year to date. We still have this big trend it's been in. We've looked at this numerous times over the years from 2018. So we're 3 years into that uptrend. But it's been a disappointing year. If we look at how other markets have done this year, plenty of them, for example, stock markets, crypto, have outperformed the price of gold. So I thought let's do an update and take a look at things in a bit more detail, a slightly more longer term look. So as usual in this video, I'll talk a bit about what's been going on with gold, why we've seen it perform how it has this year. Then we'll take a look at some of the levels to watch and come back onto the charts and look at things in more detail. We do have a trade running at the moment in gold from the 8th of August, buying in at 1740. The market at the time of recording has just slipped below 1760. So we're slightly up on that trade. So I'll decide whether we need to keep that trade running, get rid of it, do something else. We'll come back and have a look at it. Hello, I'm David Jones from Capital.com. And I thought we'd do an update, a longer term look for gold to the end of the year. So over the next few months or so. See where it might go, talk about some of the recent news, why it's been a disappointing year for gold, and talk about the levels to watch. So as usual in this video, cover all of that, then we'll jump onto the charts and take a look at things in a bit more detail. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content on the markets we cover throughout the week. Plus, of course, every Friday at 2:30 UK time, I now do a live stream direct from this YouTube channel. If you're subscribed with the alarm bell notification pushed, get a message off YouTube just as we're about to go live. Right, let's get into it and take a look at gold in a bit more detail. So I think it is fair to say it has been a disappointing year. We saw all-time highs for gold. It seems a long time ago now, but in the summer of 2020, a few things were affecting it. We saw dollar weakness then. That was definitely playing its part. But the story this year, or the story actually since those all-time highs, has been one of sort of a steady, if gradual, decline in the price of gold. It's not moved, I suppose, that much this year. At the time of recording, it's down 6% for the year to date in 2021, and it has been just something of a dull year. We had a bit of excitement in August. We had that flash crash in gold as the week started, as Asian trading got underway. We saw the price of gold lose about $100 in an hour, I think exaggerated by some of the thin volumes that we saw at the start of the week. We've seen some of those losses clawed back, but again, over recent days, we've seen it start to turn lower once more. I think there's a few reasons for the weakness in gold. Stocks are at all-time highs. We continue to see the stock market outperform. Already this month, we've seen a bit of weakness in the last few days or so, but we have all-time highs hit by the likes of the S&P and the Nasdaq, for example. So for investors willing to embrace risk, they've been well rewarded over the last 12 to 15 months by investing in the stock market and have perhaps neglected some of the more defensive assets. Plus, I think for those looking for alternative markets, I'm sure we're all aware of the moves in cryptocurrencies this year, the likes of Bitcoin and Ethereum, to pick just two. They have seen great gains this year. And I think that's what we were saying when I was talking about silver. I think it's the same for gold. It's perhaps been just stuck a bit in the middle and been neglected by, I think, investors around the world in favor of much more attractive assets. And I think that has weighed on the performance of gold. Plus, of course, we have seen not the best year for the US dollar this year, but definitely something of a recovery for the US dollar throughout this year, a gradual recovery. And of course, traditionally, a stronger US dollar means a weaker price of gold. So what next? What for the next 3 months? At the moment, I don't think there's any sign of this weakness or this slightly sideways trading, unexciting trading changing. I think things could change. I think things might change. A couple of factors here. I think if stock markets perhaps lose some momentum, we've seen great gains for stock markets, particularly US stock markets, since the March 2020 lows. I think if we saw investor sentiment changing here, and perhaps looking to bank some profits and switch out into something they perceive as more safe. That's something that could help gold. Plus, I think if you follow the business news and markets, you know that inflation concerns have been something nagging in the back of investors' brains, I think, over the last 6 months. Just this week, we had UK inflation at its highest levels in more than a decade. Central banks are saying inflation is temporary. If inflation becomes more of a problem and sticks around a bit longer than the central bankers think, then it could make assets such as gold a bit more attractive. But at the moment, still fairly unloved, I think. We have seen an important base form for gold around $1,660. That was confirmed during that flash crash in August. So we'll jump on the charts in a second. Let's talk about the big levels to watch. I think we've got a big problem area above 1800 from 1809 to 1834 has really capped any rallies in the price of gold. And again, it's played out over the last couple of weeks or so. On the downside, we're threatening an August low, the 16th of August low at the time we're recording, around 1770. After that, the big level, I think, is 1660. But as usual, to put some color on these numbers, let's take a look at the charts. So let's start off with this long-term uptrend. 3 years now since the August 2018 lows, down at 1160. This trend did a great job all the way up, then of course accelerated into those all-time highs last year. And this is where we are at the moment. I think it's interesting that flash crash in August did trade back near to that trend line. At the moment, that trend line is coming in this, I suppose, 1600 to 1625 area. So from a longer term point of view, the trend of gold is still up. If we were looking at this bigger, longer term trend, still be inclined to be a buyer of dips, assuming that trend's going to hold. So for me, the big support levels to watch going into the rest of the year for gold, runs from 1600 through to 1650. Those lows that we saw hit in March this year, and again a brief test below it in August. So lots of big support below where we are now, but still a lackluster performance. Let's take a look at the oscillator. Not surprising, perhaps given the weakness over the last couple of weeks, we're seeing the price push back down towards being oversold, which is maybe an interesting setup from a trading point of view or from a buying into this trend point of view. So perhaps we'll see a bit more weakness from the price here, but I would be watching it now to see how it performs as we push back into this zone that we picked up on the longer term chart off those lows, 1660 through to about 1680. Let's see what happens, and if we see the price snack back, I would be expecting some buying to come in if we start pushing down towards 1720 from here. But on the upside, you can see what a problem over the last, 2 months or so, this 1830 to 1840 area has been. It just can't get through it. So it does feel, I think, a bit like silver, that it needs something of a dramatic catalyst, or maybe not that dramatic, but perhaps a change in sentiment towards stocks, inflation being more of a concern, really to pick things up. But that trend is still up. So while we're above those old lows, still inclined to be a buyer on dips. I think if the market starts losing $1,600, if we start pushing below $1,600, it's a different story for the price of gold. And it will have lost this 3-year trend that it's been in, and perhaps the risk then is for a pushback eventually to the March lows below 1,500. But for now, still positive. It hasn't been an exciting year. But I think if it dipped much further than where we are now, it could be an interesting position to have to be a buyer looking for that trend line to hold for the rest of this year. So still an interesting market to watch. I know it's a popular one with plenty on our channel, but still somewhat lackluster at the moment. That's it for this update in gold. We'll see if the next few months change. At the moment, I do think we need a change in stock market sentiment or a change in attitude towards inflation to make things perhaps a bit more interesting. It looks like we could still be somewhat range bound over the next few months. We'll come back to it and do updates, of course. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.